Hello everyone, this is Chuck Carnevale, co-founder of FastGraphs, the fundamentals analyzer software tool, and one of the founding partners of the Dividend King. Today's FastGraphs Analyze Out Loud video is going to take a look at the Bank of Montreal, one of the top 5 Canadian banks. The reason I am featuring this over any of the other Canadian banks, and I say that because I actually do like all the Canadian banks right now. I think they all look reasonably attractive. However, there are some concerns about the retail housing market in Canada and the exposure that a lot of the big banks have. One of the advantages of the Bank of Montreal, other than the fact that it's the 4th largest bank in Canada, is that it not only gets its revenue from Canada, but it gets 30% of its revenue from the United States. And it's also one of the biggest producers of, rather than just retail loans, they also are heavy into commercial loans, which are a little more secure than the housing market in Canada right now. And another thing I like about them, they're also a wealth management. They do a big business in wealth management, and they're the largest producer of ETFs in Canada. So they do have some diversification that some of the other Canadian banks don't have. However, it's just not this diversity that's attracted me to this particular Canadian bank. I also like the fact that it's trading at a very low valuation right now. The blended PE is 9.9. You can see that, they are suffering from COVID just like the U.S. banks and everyone else really in the country is. But the price has really overreacted to that. Their normal price to operating earnings would be around 11.85. They're trading at 9.9. But like most financials, they do tend to trade at a discount. You should notice that. The bank's a little cyclical, and by virtue of the fact that I'm showing it in U.S. dollars here, they do have a somewhat, I wouldn't call it spotty, but it's not a perfect dividend record. They did cut their dividend during the Great Recession. They also cut it again in 2012, and they had 3 cuts in 2015, 16, and 17. But otherwise, they've got a good, consistent record. They've paid a dividend every year, and they didn't ever cut their dividend too much. And by the way, I want to make a point here. I'm going to switch this, if you will, from the U.S. New York Stock Exchange to the Toronto Stock Exchange. I want to give you this perspective as well. When you examine Bank of Montreal in their country of origin utilizing Canadian dollars on the Toronto Stock Exchange, Canadian dollars, you get a different picture of the dividend. Their actual dividend record in their country of origin has been a lot more stable than what I showed you in the U.S. dollars. Now, they did freeze their dividend during the Great Recession and froze it for 3 years, but they have a much more consistent dividend record if you're looking at them in Canadian dollars. They also have a much more consistent operating history as well. But I'm going to tell you what I found really interesting about this. This company, again, is dual listed as 5 of the top 6 are. So if I move to forecasting here and look at 12 analysts and what their forecasts are for the future in Canadian dollars, and then calculate what that rate of return, as I showed you this in the graphics in the written portion of this presentation, they're expected to earn 27.26% going forward. Now, that is obviously an excellent future rate of return, but again, watch what happens when I go back to looking at the company in the U.S. dollars, which is what I'm assuming the majority of us will be buying this stock. If we did buy it, it would be in U.S. dollars. In contrast to the 27-ish% annualized rate of return we saw in Canadian dollars, if you bought it in U.S. dollars, the companies would be expected to earn 34%, and that's based on a 15 PE ratio going out to 2022. Now, if I applied the normal multiple, which is a little lower, we'd still be looking at over 20% annualized rate of return. I think this between 20 and 30% rates of return on this particular stock are in the cards. Now, we do notice that there's obviously a currency exchange effect here, and I think that's what I found most interesting when I'm analyzing these Canadian banks. We all worry about that. I do think it's in a lot of ways a paper tiger. There are effects, and they do have some impact on the dividend, as I pointed out, and we also get some impact on the operating results. But generally speaking, the Canadian banks are very inexpensive. Bank of Montreal specifically gives us a 5.46% yield. It has 7% long-term debt to capital. It's A+ rated. It's a market cap of $36 billion. And again, it's the 4th largest Canadian bank out there. I think it's an excellent buy at this level, and I think it's one that you might want to consider if you're looking for more of a total return. It does have the opportunity for decent dividend growth. I do want you to notice the analysts are expecting dividends to be flat for 2020 and 2021, but then they do expect them to start growing again by 2022, but we can get a 5.46% current dividend yield. And in today's low interest rate environment, and considering all the other things that are going on, I think that makes this a reasonably attractive investment. The analyst scorecard is good, not necessarily great. They've only missed estimates 18% of the time on the 1-year forecast with a 10% margin of error and 10% on a 2-year forecast. So all in all, this is a bank that's very cheap right now. It's be an excellent time to buy it. It's one of the better banks in Canada, one of the larger banks in Canada. And what I really hope you enjoyed, as I did, was seeing the difference here between looking at these banks in Canadian dollars versus US dollars. Anyway, this has been Chuck Carnevale. This is our Fast Graph Friday on the Canadian Bank of Montreal. Hope you found it interesting and look forward to talking to you guys again real soon. If you like what you saw here, don't forget to give me a like, ring the bell, and follow us, subscribe to our YouTube channel here. I'd appreciate it. Thank you.